Hello there. Welcome to a brand new adventure, one that's a little different from our usual journeys. Today, we're not blasting off to outer space or exploring distant lands. Instead, we're setting off on an exciting trip into the bustling world of the stock market, a place full of opportunities, surprises, and clever ideas. Today, we're off on a new adventure, not to the moon, but into the stock market. Imagine the stock market as a lively city where people from all walks of life come together to buy and sell tiny pieces of companies, hoping to grow their money over time. Think of it like buying a tiny piece of a great bakery. When you buy a share, you're becoming a part owner of that business, no matter how small your piece may be. If the bakery thrives, your piece becomes more valuable. As more customers flock in and the bakery's reputation grows, so does the value of your share. It's like watching your investment rise with every delicious pastry sold. The goal? Earn a steady $100 a day, not by luck, but with smart, careful planning. It's not about wild guesses or risky bets, but about making thoughtful choices and sticking to a plan that works for you. Companies sell shares, little pieces of themselves, to raise money, and we can buy those shares hoping they'll grow in value. When a company does well, everyone who owns a piece gets to share in its success. Trading is simply buying and selling these shares for a profit, like selling slices of a cake. Sometimes you might hold on to your slice for a while, letting it grow, and other times you might decide to sell it when the time feels right. But it's not a get-rich-quick scheme. It takes patience, planning, and a steady hand. The best investors know that slow and steady often wins the race, and that learning from mistakes is part of the journey. We're building a reliable machine for making a bit of extra cash, one careful step at a time. Each decision, each investment is like adding a new gear or lever to your own money-making invention. So grab your thinking cap and a cuppa. Get comfortable, because we're about to unravel the mysteries of the stock market together in a way that's fun and easy to understand. We'll break down the stock market piece by piece. We'll learn what shares are, how to spot good opportunities, and how to avoid common mistakes that beginners make. By the end, you'll see that making money from stocks is a lot like inventing the perfect breakfast machine. It takes creativity, patience, and a willingness to learn from each attempt. All it takes is a bit of know-how and a good plan. So let's get started and see how you can build your own path to financial success, one smart step at a time. Let's get to grips with the basics. Before you dive into the world of trading, it's important to understand the language and concepts you'll encounter. Knowing the lingo will help you make smarter decisions and avoid common pitfalls that trip up beginners. A stock is a small slice of a company. Own one, and you're a part owner. When you buy a share, you're not just holding a piece of paper, you're actually claiming a stake in that business. If the company does well, your share can become more valuable. Trading means buying stocks when you think they'll rise, and selling them for a profit. It's a bit like shopping at a market, except here you're hoping to buy low and sell high. The price of stocks goes up and down all the time, so timing and research matter. If you buy a share for £10 and sell it for 12, you've made a £2 profit. That's the goal. Buy at a lower price, sell at a higher one, and pocket the difference. But remember, profits aren't guaranteed. But sometimes things go wrong. A share can drop and you might sell at a loss. The market can be unpredictable, and even experienced traders sometimes lose money. That's risk, the chance your investment could lose value. Every time you buy a stock, you're taking on some risk. It's a normal part of trading, and it's why you should never invest blindly. You can't avoid risk, but you can manage it. Never put all your money into one stock. This is called diversification, and it helps protect you if one company doesn't do well. Spreading your investments is a smart way to balance risk and reward. Only trade with money you can afford to lose. Think of it as your risk budget. Never use money you need for essentials like rent or bills. This way, you'll keep your finances safe, even if a trade doesn't go your way. In a nutshell, buy stocks, aim for profit, but always be aware of the risks. Trading can be exciting, but it's important to stay grounded and make decisions with your head, not just your heart. Understanding these basics is your blueprint for trading. With a solid foundation, you'll be better prepared to handle the ups and downs of the market. Know what each lever does before you start. Take time to learn the terms, tools, and strategies that traders use every day. That's the first step to keeping your trading machine running smoothly. The more you know, the more confident you'll feel as you begin your trading journey. Now let's get you set up and ready to trade with confidence. Time to get your trading toolkit ready. First, open a brokerage account, your gateway to buying and selling stocks. Start with a small amount of money, just enough to learn without worry. Pick well-known stable companies for your first trades. Think soap or cereal, not wild inventions. Do your homework before you buy. Most importantly, have a plan. Know why you're buying, your profit target and your stop loss, the price where you'll cut your losses. Trading without a plan is just gambling. We're inventors, not gamblers. Calculate, design, and then execute your plan. That's how you build a winning trading machine. What's a trader's day really like? It's not all flashing screens and wild risks. There's a rhythm, a structure, and a lot of patience involved. Let's walk through a typical day in the life of a disciplined trader. It starts with a cup of tea, a moment to gather your thoughts and set your intentions for the day ahead. This quiet ritual helps you focus and prepare mentally for the challenges of the market. Next comes a look at the news. What's moving the markets? Are there any big headlines, earnings reports, or global events that could impact your trades? Staying informed is crucial, but it's just the beginning. Focus on a small watch list of companies you know well. By narrowing your attention, you can spot patterns and opportunities more easily, rather than getting overwhelmed by too many choices. Wait for the right setup, based on your plan, no jumping in blindly. Patience is your greatest ally. Sometimes, the best trade is no trade at all, and knowing when to sit on your hands is a skill in itself. When your signal appears, buy a set number of shares, following your risk rules. Every trade is calculated, with position size and risk limits set in advance to protect your capital. Set your profit target and stop loss, then monitor your trade. This way, you know exactly when to exit, whether you're locking in gains or cutting losses before they grow. If you hit your daily goal, stop trading, don't get greedy. Consistency is more important than chasing every opportunity. Celebrate the small wins and recognize when it's time to step back. Discipline is key. Stick to your plan, avoid chasing more. The temptation to overtrade is always there, but true success comes from following your rules, not your impulses. The market will be there tomorrow. There's always another opportunity, so there's no need to force trades or take unnecessary risks today. A successful day is about hitting your target and walking away. It's about knowing when enough is enough and being satisfied with steady progress. That's how you keep your trading machine running smoothly. Consistent habits, careful planning, and emotional control are what keep you in the game for the long run. Earn your cheese, then enjoy the rest of your day. After all, trading is just one part of life, so make sure to savor your wins and recharge for tomorrow. Let's talk about avoiding disasters. Never trade with money you can't afford to lose. Protect your essentials. Use stop-loss orders to limit your losses like an emergency eject button. Diversify. Don't put all your money in one stock. Spread your investments to balance out the risks. Control your emotions. Don't let fear or greed drive your decisions. Stick to your plan, stay calm, and you'll avoid most trading mishaps. That's how you keep your trousers on the right legs. Ready to start? Here are some final tips. Start small. Think of your first trades as test flights. The goal is to learn, not to get rich overnight. Write a simple trading plan. What to trade, when to buy, how much to risk, and where to set your stop loss. Practice with a demo account. Use play money to test your strategies. Keep things simple. Focus on price movement, not fancy indicators. Build confidence before risking real money. A simple, reliable plan beats a complicated one every time. Learn from each trade and keep improving. That's the secret to steady progress. We've peeked under the hood of stock trading. It's about simple ideas. Buy good businesses, have a plan, manage risk. Earning $100 a day takes patience and discipline. Be a lifelong learner. The market is always changing. Keep a journal of your trades and learn from every result. Practice with a demo account until you're consistently profitable. Don't rush. Real money can wait until you're ready. Be patient with yourself. Mistakes are part of the process. With a good plan and steady practice, you'll be on your way. Cheerio and happy trading.